G'day. Hey.
Please give me 5 seconds to get to you with a mic.
Hi, I'm an investor.
G'day.
For a long time, very happy. Thank you very much.
Thank you.
Just a couple of things. It's a very small fund, 200 million.
Yeah.
Your fees are 1.5%,
Yep.
which is $3 million plus other fees. How do you do it all with this relatively small amount of money? Where are you getting the support? Who is Mirabella? What's the combined connections of all these groups that allow you guys to be out here on a pretty ordinary fee base?
Sit down, please, because we can share that.
Oh, okay. We'll sit down. Well, I'll start off giving the really long answer to that question, and that is we're married and we're kind of doing what we want to do. Emma spent a decade working for some of the really big investment banks in London, Citigroup, Rabobank, and she spun out and set up her own little boutique. When was that? 2011. Great success. And then I was working for a hedge fund. You know, really enjoyed the work, but you feel like you're a small cog in a big machine. And we were sort of thinking about life and decided what we actually wanted to do for the next 20, 30 odd years was this. So we started Global Value Fund. When we started, it was $50 million. So a tiny little fund. As a business, it was loss-making. Like Emma and I were not just working for free, but we were paying to turn up to work for the first couple of years.
As you do as business
real.
owners, you know.
But we've finally grown the business to the point now, and I mean, Emma has been quite successful previously, which meant there was no sort of cash flow problems for a few years. And that has meant we've kind of grown the business now to a point where it's steady state. We've got a big team in London. They're all very bright, paid very well. There's a performance fee element, which means if we perform and we have a couple of years picked up some extra fees from that, it keeps the lights on and makes it interesting for Emma and I. And we've said all along we want to get GV up to about $300 million in size. Not much bigger. If you remember, I was talking about the arbitrages we take advantage of. We don't want to get so big that we our returns start to fall. I think that's one of the big challenges that you see with investment managers, especially managers with a really niche little strategy. It's quite common kind of journey to have a really interesting track record on a small amount of assets. And with that interesting track record, you raise a lot more money and then returns start to fall, but maybe the manager retires wealthy. So we've been very keen to say from the beginning we're going to limit the size of what we do because we're fundamentally mostly only interested in the returns and what our investors get. And the other thing to say is we've been working for a while now to launch a second fund. It'll be the last fund we do, and that's an offering for some very large institutions in the world. At my previous firm, we had some real marquee the large and great institutions in the world investing in us, and we wanted to set up a smaller vehicle that could maybe cater to them. And pleasingly, Emma did a lot of the hard work. We got that off the ground last year. So a big Asian endowment gave us a $20 million investment for the new fund, and we hope to get that up to sort of $100 million over the next year or two. So the long way to answer that, it's sort of a journey. Emma and I are not terribly motivated by money. We're kind of just doing what we want to do for.
Let me add, just in terms of your question around Mirabella and resourcing, because obviously that you're absolutely right. The amount of due diligence that we do is absolutely massive. Couple of things to say. One, as Miles said, we want to maintain our small size. So even when both funds are at capacity, so when GVF is at 300 and the second fund is at its capacity, we won't run more than 400 to 500 million in AUM, which is tiny in the asset management world. What that allows us to do is it allows us to be very small and nimble. But also, we've spent the last 2 decades building a database of IP. So the world that we work in is about $500 billion in assets, and we've been monitoring that world, or we monitor that world on a constant basis and have been doing for 2 decades. So we've built up a lot of IP in the space. The other thing to say is we have very senior portfolio managers. So we have Miles. We have James Dow, who's worked with us for 2 decades. He's the trader, very introverted. You probably won't see him much front-facing, but he's very experienced. And we hired 2 years ago a very senior chap who'd been on the sell side of this business for 10 years. And you're absolutely right. People of that caliber managing the amount of money that we're managing is unusual, but I guess the way we looked at it was we'd rather resource the business before we get to the size that we want to get to. And I think that's been really motivating for us. In terms of Mirabella, you asked about Mirabella. You guys will know, especially in the UK, Australia, and the US, regulatory requirements and compliance has gone ballistic. So instead of tying ourselves up with regulation and compliance, what we do is we use a company that's sole focus is to do compliance and regulation. Mirabella actually does the compliance and regulation for 26 billion of assets, of which we are, 230 million. But we just felt that having a firm like that overseeing us, making sure that we're doing all the right things, was a much more efficient way than Miles and I suddenly becoming compliance and regulatory
experts on the weekends.
Experts. Does that answer your question? Please.
I guess I'm happy with everything, but I'm concerned about the key man aspect of
Yeah.
you two guys, and the fact that I don't know whether the total fees you got was obviously much more than 3 million. One of your staff probably gets $3 million in London, so I don't know how you do it, but I'm more concerned if you get run over by a bus, the two of you.
So I guess as a business, everyone apart from Emma and I are paid market rates very well, and they're incentivised to make it a big success. And Emma and I are taking a 10, 20-year view on doing this. We're doing what we want to do. We're not really motivated by money, especially in the near term.
Yeah.
In terms of the key man risk, we get that question a lot, especially on this trip. I guess the Hamish Douglas affair has put it on everyone's minds.
Yes.
And what I like to say is I sort of find it flattering. Emma and I think, get too much of the credit because we're the ones that come out and meet everyone. In terms of the investment team, there's myself, there's Mark Ambrose, and there's James Dow, all in their 40s, all have been doing this for 20 years. And we all collectively make every investment decision. So it's not like there's sort of a me dictating down. It's a very collaborative environment. Mark especially is very senior hire for us, and what we were saying was we'd probably bring him out in the next few years so he can meet more of the investors. So if I would be hit by a bus, the proverbial bus, you've lost a third of the investment team, not 100% of the investment team. And just to say, a lot of what we do is on the trading side of the business. It's been running it for 15 years. It's almost mechanical. James has been doing that stuff forever. So obviously, with any kind of active investment management, there is the risks of the key people in the business. But to sort of ameliorate that a little bit, we get far too much credit. There is a much bigger team behind us. It's just we're the ones that put on the tie and come out and say hi to everyone.
Don't fly on the same aeroplane.
Yes, exactly.
My sister said the same thing because she would inherit our kids.
Yes, exactly.
But it is a really good point. And the thing is, you do take a risk. That's the reality. If you're going to work with a smaller manager, it is something that is worth considering. That said, smaller managers that are more boutique like ourselves also tend to produce better returns on a risk basis.
Yeah.
Could you tell me how many staff do you have? And do you live in Australia, but you've got this big office in London, and I want you to fly over there, or you have Zoom meetings, whatever.
Yeah.
And then you fly around the world a bit looking for growth potentials, as you say. Is that how it works?
I'll articulate it a bit better. So no, I grew up in Sydney, but I moved to London in 2005. So I've been living in London for 20 years. And the team and I and Emma are based in London. So we're a London business. But we've obviously got the Global Value Funds, an Australian investor base. So we come out here a lot to meet everyone. And as an Australian and hopefully a soon-to-be Australian, our plan was always to move back. We've been investing a lot in the team. So on the investment side, there's myself, Mark Ambrose and James Dow. So 3 guys all in their 40s. As Emma was saying before, if you looked at like a big fund management business, we're in the business of fund management as opposed to sort of a boutique. 3 senior guys like that would be probably managing $2 or $3 billion. We're managing a couple of hundred. And we've recently just made another hire, a young bright spark, an Oxford mathematics grad, can speak 3 or 4 languages, can program in 3 or 4 languages. So he's come in to sort of be our new grunt. And that has sort of gotten us to get London where we wanted to. And the bits of news we've been saying to our investors, I should have mentioned earlier in the speech, was that we will be opening an Australian office later this year for 2 reasons. One, from a business point of view, we invest a lot of money in Asia, and it's hard to do from the London time zone. So we've worked out the numbers. We've invested about 1/3 of our capital in Asia since starting the fund in 2014. And that 1/3 of the capital has generated a good bit more than 1/3 of the profits. So Asia has always been a really interesting place to invest. It's just been a very difficult thing to service from London. So we're going to open an office in Australia, maybe hire 1 junior in the near term, and have a big push on trying to do the Asian markets a bit better. Mark, James, and our new hire, Marius, will still stay in London. And then the second reason is a personal reason. It's like Emma and I always wanted to end up in Australia. I've got parents in Sydney, grandparents for our kids. So we've been sort of building the business to the point where we could open that second office and move out.
The only thing I'd add to that, it's completely gone.
That's good. But and we, to say we will still spend a lot, to your earlier point, we'll still spend a lot of our life on the plane back and forward between London and the Zoom meetings and trying to make it all work. Yeah. Yeah.
Oh,
Thanks very much for that presentation. I found it very interesting.
thank you.
A couple of quick questions, a really main one. What are your fees?
Yeah. Our fees are 1.5% per annum, and we charge a 15% performance fee over a hurdle and a high water mark. The hurdle is cash rates plus 4%, and the high water mark resets every year.
Thanks.
Just one more thing, I suddenly realised what I was going to say. The other reason for the move back to Australia, and I want to talk a little bit about our share price just for a second. In general, GBF has traded at NTA. If you look at our share price from 2014 through to the end of February this year, the average discount premium that we've traded at is a 2% discount. So very close to NTA, especially in the environment of LICs where a lot have traded at a discount. That said, over the last 6 months, 12 months, we have traded at a maybe 3-4% discount, which is quite unusual for us. And we feel that if we were to take a leaf out of Jeff Wilson's book in terms of managing LICs, his holy trinity is performance, yield, marketing. And given that we've delivered on performance, and I believe we've delivered on yield at 9 cents grossed up every year, the marketing aspect and the fact that we've been hamstrung, we've been stuck in London for 2.5 years, haven't been able to see our investors, that has built in a small 3-4% discount. And I think moving back to Australia will give us the opportunity to spend a bit more time with our investors, something that we're motivated to see us go to that NTA/premium.
Yeah.
Thanks, Al. Good morning all, my name's Edward Patching, and if your chair would allow, and if Miles would allow, I'd like to offer a confession and a comment and a warning.
Okay.
My confession firstly is that I'm one of those terrible Mexicans who fled south from Canberra a bit over a year ago and find myself newly established in the Gold Coast and think it's a wonderful part of the world. So thanks for welcoming me here, and bad luck for all you guys paying full rates, because I think Rod Glover's offer was excellent and I'm signing up as soon as I've finished here. My comment is an extension of what Emma just said in referring to Jeff Wilson. Many of you here will be aware of the name Jeff Wilson. His funds are one of the prominent ones that are around, and that reminded me that during my time in Canberra for 5 years or so, I was the ACT chairperson for the Australian Shareholders Association, another body that some of you here I hope will be familiar with, largely volunteer group that works to promote the interests of retail shareholders. So in my role as the ACT chair, I would occasionally find myself talking to fund managers, many of whom were a bit inclined to be dismissive of retail shareholders. 2 stood out who weren't. One of those was Jeff Wilson, and the second one is the gentleman that we see sitting over here. So my estimation of Global Value Fund and the people associated with it went up when I found that I was dealing with a person who was genuinely interested in the shareholder perspective. And over the years I've watched GVF go along, and I've been quietly impressed. Well before we all started thinking about ESG, environmental, social governance issues with some of our investments, Miles was actually doing it. So that, for instance, he also does a good job of keeping shareholders informed with things like a monthly newsletter. I looked at the most recent one for February yesterday, coincidentally. He has a bit of a general blurb about where he sees the world, where things are going, and often gives a bit of mini case study type stuff. He referenced 5 companies in which GBS has an interest, and on 2 of the 5 companies, this gentleman and his team had been active just in the last month, 1 in getting a director on the board, and 2, secondly, in arranging some return to shareholder of funds owned by that company. And I would just invite you to reflect, those of you who hold managed funds or are involved with super funds, how many of those funds can say that in the last month we were involved in kicking boards up the backside or encouraging them towards better returns for our shareholders? So I would simply applaud that approach. Miles mentioned it's part of what they do to unlock value. I've watched them for a while and I think it works. So well done, that's that. The last part is a warning, Miles.
Okay.
My warning would be, if you do get going with a second fund, and I can understand why initially it might be attractive to the big institutional retailers, but if you don't find a way to open it to this retailer side of the market who might be interested, then we, the retail shareholders, will be hounding you and will be very unhappy with you. Yeah.
That's tremendously kind, Edward. I'm a bit embarrassed, but thank you for saying all that. I mean, I'll let Emma say a few words too, but I mean, on the second fund, we get so much joy out of running a retail product. We get to meet so much of the interesting people around the country. We get to see so much of the interesting country. One of the big challenges I had with convincing Emma to come back to Australia was she saw so much of Australia. The first thing she said was, I'll move anywhere in Australia with you as long as it's not Sydney or Melbourne. So that was sort of her opening gambit.
I still feel that way.
But having that second fund, so just to say on the second fund, it's essentially the same product, exactly the same fees. They're not getting a fee haircut or anything like that. But having relationships with those big institutions does have some benefits that benefit everybody. And do you want to run through the AA4 example?
Yeah. I mean, well, the first thing to say, just the reason we launched the second fund was because we wanted to diversify our business. So we knew that we had our GVF investors, 3,500 retail shareholders, and in order to be smart business owners, we thought if we launched the same fund but to a completely different audience, that would be a good way to kind of hedge ourselves, I guess. So the second fund is a US dollar denominated version of GVF. It's in the Cayman Islands. It has a $2 million US dollar minimum, and it's predominantly for large US endowment funds, so the university endowment funds, who love what we do. They see that we won't scale it, and that's the interest there. But as Miles said, as well as a business diversifier, it actually can work very much in the hands, in favour of GVF. And I'll give you an example. Amadeo, the case study that Miles ran through, a very big block of stock came up in Amadeo. One of the fund managers who held the stock had been told from on up high that he needed to get rid of anything to do with airlines because of ESG. We can debate what that means, but ultimately he was told, sell everything to do with ESG. Really easy to sell American Airlines if you own that. Not so easy to sell something like Amadeo. And what happened was it was a large block of stock, and we had more than enough. The block was way bigger than what GVF needed, way bigger than what our second fund, SVF, needed. And the first investor into SVF turned around and said, listen, take the whole block out and we'll fund the rest of it. And this is often the case with these large institutions. They can make, $5-10 million available at 2 to 3 days' notice. What happened was we were able to negotiate that block at a price that we would never have got for GVF, 15% below the market. And I think having that access and firepower is something that we think is really positive for GVF.
Just to add, so, I mean, one of the advantages of those big institutions, they're not quite as friendly a bunch to talk to, but they have access to a lot of money, and there's certainly times in the market like this trade that came along, is like we went to them and said, we think this is an amazing opportunity. We think if we had some more firepower, we could really negotiate a great price. And we ultimately managed to get a price that was 15% below the market just because we could buy the whole block. And then everyone benefits. So GVF gets set 15% below the market, and they obviously get the rump of the trade at a great price as well. G'day at the back.
A wonderful presentation, Emma and Miles. You made reference to hopefully the positive scenario that might come out rather than the negative one where we just have galloping inflation. Miles, I'm going to Sydney next week and I'm Sydney boy. I've got a solution for you.
Okay.
I live in northern New South Wales.
Okay.
You could set up properly on the Gold Coast and live still in New South Wales.
Exactly.
You could live at Nora Point or
I love this man.
You're not making my domestic life easier.
I live in the last house in New South Wales, literally the last house in New South Wales. The stage is the Queensland border, actually too close to them. So there's your solution, and then you can take part in our wonderful community here on the Gold Coast. And somebody was talking about, not paying for stuff. A couple of friends of mine and I, we cycle the Gold Coast cycleways and we enjoy the Gold Coast lifestyle. But we don't even pay any rates around here, so we've got it nailed.
The value trade.
Brilliant, the value trade.
We would, in truth, I would move here in a flash. The handbrake has been my mum and dad and the grandparents. I've been away for a long time. I've got 2 young kids. And it's just, it's tough. We look very closely at places like this, also Toowoomba. Emma kind of had her heart set on. Emma grew up riding horses in the African, she's South African, grew up riding horses in the African bush. So I'll move here in a flash. If you can convince my mum and dad to...
It's going to be difficult to organise the riding horses in the African bush. Everything else, we can nail that. Thank you very much for today.
Thank you so much for the feedback.
Just a couple of others.
One of our sponsors for this group is the Collins Street Asset Management Fund. It's a private fund. Do you know them?
I don't know, no.
Okay. They say that they're the number one fund return. They've been judged by Morningstar.
Yep.
They are, you've got to be a sophisticated investor.
Okay.
To put money in with them. So the minimum, for us, they say it's 100,000, where other people it's 250,000, and you've got to have net assets at, I think it's 2.5 million.
Yep.
Are you for sophisticated investors only?
No.
What do you want to...
We're available.
If not, what is the minimum amount?
$1.20. Our share price is $1.20. And we're on the ASX, so no, we are fully retail. So this is quite a sophisticated strategy. One of the great things about LICs in the Australian market is you can wrap up a reasonably sophisticated strategy and make it available to, retail investors. So there's no minimum. We just the ASX code is GVF. You can buy and sell shares on the ASX, and the minimum is just the minimum, one share, so $1.20.
How do you intend to increase the share amount?
Hang on, I'm coming.
So,
how do you intend to increase the amount of shares in the future, what you were talking about earlier?
yeah, so we started off very small, $50 million. We've grown to 210 today, and we've said we'd like to get up towards 300. If we never do, we never do. We've done that because we've always traded really well. So we've historically spent a lot of our life trading at a premium to asset backing, and that's meant that we've managed to do some follow-on capital raisings over the years. I think we've raised a little bit of money sort of 6 out of the 7 years we've been going, 6 out of the 8 years we've been going. We normally do that kind of through word of mouth. We'll do a small issue, $20 or $30 million. We always prioritise our existing shareholders first, but there's always been a bit left over as well. And that's kind of the way we want to do it. We don't want to suddenly double in size, just growing slow and steady through time is sort of suits us best.
I remember earlier in the piece you had a share buyback.
Yes, no, we have a really unique dividend reinvestment plan. So
we haven't bought back shares though.
We have through the DRP. So when we set up the LIC, one of the things that I noticed with LICs in Australia was that the managers ran these dividend reinvestment plans no matter what. And I always thought that wasn't so great, because if your share price is trading below your asset backing and you issue new shares to investors, you're sort of taking value from one shareholder and giving it to another. And arguably, it's kind of in your own best interest. Every manager wants their fund to be bigger. So what we did, which was a bit innovative, and it took us six months with the lawyers to figure it out, was we have a DRP, or dividend reinvestment plan, whereby if our share price is at a premium, we'll issue new shares to people that want to take up the dividend option, the reinvestment option. But if we're at a bit of a discount, and that happens from time to time, then we don't issue new shares. We go into the market and buy new shares on behalf of the participants. So and that means we're obviously not growing our AUM, which is not so good, from a business point of view. But I think on a principle, is a much better way to run that kind of operation. So the only times we've ever bought back shares is through the DRP. And it's going to be quite neat. When we set that program up, I think half a dozen other LICs have kind of copied us over time, so it's nice.
Which is good. Yeah.
Nice too.
Good for the market.
It's a bit over, so markets are moving around, but say about $1.22, and yesterday the share price was $1.19. That's all right. The question was, what is our NAV at the moment? The pre-tax is about $1.22, and the share price is about $1.19. Well, one thing to say too, just to put it in maybe easier language, Emma said we've always paid out like an 8 to 9 cent dividend. To turn that into more useful language, we've always had about an 8% fully franked yield. So we're paying out quite a lot of income, 8%.
What percentage of the what percentage of your profit is that generally paying out?
Well, so we aim to pay. So we pay. The premise from the beginning was to pay everything out. And we kind of want to give you the choice of whether you reinvest it as opposed to forcing you to reinvest it. So we pay out this 8-9% dividend, and if you want to reinvest, you're obviously welcome to.
Thank you.
So, hey, look, guys, I think we've kind of worn you all out. So thank you very, very much, and we'll be hanging around if you want to ask any more questions. Thanks for making some time.